Alright everybody, so I'm going to make a video about how to cope with the bear market. I'm not saying that we're entering one now, but it's always worth having a strategy to prepare yourself in the event of a bear market, whether that's to protect your gains, and essentially go into hibernation and wait for a new uptrend to begin, whether that takes a month, 2 months, a year, or whatever the bear market may be, or even profit from it. And I can tell you now, I've survived, not just survived, but I've made some decent money in bear markets. In fact, probably say that bear markets are my preference. Not that I'm a bear or anything, it's just that I feel like I've spent more time actively trading in bear markets than I have done in bull markets, because it's easy to make money in a bull market. You've heard the phrase everybody's a genius in a bull market, which is true. You could throw a dart at a dartboard full of altcoins and Bitcoin and just pick one at random. In a bull market, you're going to feel like a genius because you'll be making money. In a bear market, it's kind of different, and there is a little bit more skill and strategy that's needed to be involved, and you do take on a bit more risk if you do want to trade within a bear market. So the first thing I would say is, if you're looking to survive the bear market and you're new to trading, and there's nothing wrong with holding your hands up and saying, "Look, I'm not the best trader," then probably the best thing to do is to sell up and go into hibernation and wait for another established uptrend. Simple as that. There's absolutely nothing wrong with that. You don't have to be actively trading it all the time. Sometimes being in cash is the best way to not make money, but preserve money and wait for an entry point, which may take several months. In the worst case scenario, it could take over a year, and it has done in the past. Now, when we're talking about Bitcoin at this stage in the market cycle, we expect doesn't mean it's going to happen. Market cycles, they fail all the time. Bitcoin's a very small asset. It's not been around for a very long period of time, but so far the market cycle's held up every time. But 12 years of market cycle history is not a great deal of certainty that it will continue to hold up, but for the moment it is. So we're under the presumption that it's going to continue, which basically means we have until at least the fourth quarter of this year, 2021, of bull market. But it doesn't mean that you can't get significant pullbacks and essentially bear markets within a bull market, like what we saw here in 2019. So we're going to use this as an example first of all. So how do we spot a bear market if we're deciding to trade it? So first of all, if you wanted to sell up and wait for a better opportunity, that's fine. That would be my preference to the majority of people who aren't prepared to trade in a bear market, because it's way more riskier than trading in a bull market, where basically everyone is a genius. In a bear market, it does take a bit more analysis and a bit more skill, to be able to make money on it. So if you're doing spot, what you really need to be doing, and you've got to be careful doing it, is looking for resistances and supports. And supports, you can buy those supports, but you cannot get greedy. You have to make sure that you sell at the resistances, because if we are in an established bear market, then it's not going to make a higher high. You can't just buy the dips blindly and wait for it to continue to go up. You can buy the dips, but you have to make sure that you are prepared to sell on the way up. These sort of things sound easy, but it's hard for people, and everybody feels the same way. I feel the same way. When you buy a dip and you see it going up, you go, well, actually, this could be the one. This could be it. I think this is going to go up from here. But and then it doesn't, and then it goes down, and you think, well, I might just recover. It's a psychological aspect of trading, and you just have to think about it as in terms of statistics, and be grateful for the little bit of money or the vast amount of money that you might have made on that one trade. So we're looking at this as an example. So we had a parabolic run here. It went too high for this stage in the market cycle. We'd bottomed here, the start of the market cycle. Essentially, we essentially bottomed all the way down here, and this is where people began to get excited, because signatures were beginning to form on this asset at this point, on Bitcoin, to say that the bottom is definitely in now, with a degree of certainty. And then that's it. It picked up so much momentum, and people went crazy on it. It went up massively. It went up massively. Went up. And then it just blew up way more than it should have done at that point. So we ended up going into a bear market for a reasonably long period of time. We'll measure this out from the top here to, and to be fair, we're not going to measure the COVID situation here. We're going to measure it down to about this level here, where the bottom would have formed if it wasn't for the pandemic. So there's 175 days worth of bear market in a bull market cycle. The 4-year market cycle, we had a period here of 174 days of bearish momentum in a larger bull market. I mean, we only need to zoom out to see that that was the case. It doesn't look very big anymore, does it? It looks insignificant really compared to what's actually just happened here. But that did happen, and it was a bear market within a bull market. Okay, so don't take everything out of context. You get these happen, all right, and this is always possible. It can happen at any point. And again, we're not going to count this. This isn't anything that could be accounted for on the chart alone anyway. So we'll call this effectively the bottom. And if that was the bottom, from the top to the bottom, we had a retracement of 53, almost 54%. So when does this become a tradable downtrend? When do we stop buying the dips and expecting it to continue up? Well, when we saw this, we had this big move up here, we came down, we were respected on here, the uptrend is still in play, there was every chance that this could continue, but it didn't. We formed a lower high here, alright? So that was the first area where we would think, okay, a lower high, let's see what happens next. The next thing to happen was a calamity, a horrendous sell-off, a massive sell-off, and then at this point we really did start to see a shift in trend, because we broke down below all moving averages of pretty much any significance. The only thing below us was the 200 exponential. All right, so at this point we had a lower low form, and then we had I suppose a rejection from the center of the Bollinger Band back down to retest those lows. At this point, people could consider that this might be the bottom, because we were respecting an area of this here and these zones here and these zones here. So this could be an area you'd buy at. So again, buy at resistance, buy at support, and sell at resistance. Again, at this point now, there's every chance that it could still recover. We can look at all these other signatures involved and think that this could still recover at this point. So we had a nice big bounce here, but we did still form another lower high. Right, okay, so we've got lower high there, we've got lower low, we've got lower high here, and then what happened here, we came down to these resistances. Okay, that's fine, that's not yet a lower low, that's no problem, it's still respecting this support zone, I mean. And then what happened here is a very small bounce here. It would become clear at this point now that we would really be looking for a lower low to form, and that's basically what happened. There's a number of different ways we could think about how that's going to happen, but if you're privy to some of these indicators I use, one of the ones that we would use would be an Ichimoku cloud conversion baseline. We had an up cross here beneath the cloud, that's no good. We had a negative one here, and this is a shorting signature. This is where we short. This is the opposite of how we treat it in a bull run. In a bear market we short from here, and this is a short signal on a daily. So we got this signature how many days in advance? We got it here, and then 6 days later we basically came down by 22%. Okay, fair enough. The downtrend continued from there. With this was something else that took place here. That was something else. That was like a buy the rumor kind of vibe. It still wasn't strong enough. Rejected at the previous support zone. Now resistance, downtrend in play, and then it was over. So right, that if you want to trade that as spot, what I was saying is that you can't get greedy. Like, at the end of the day, you're buying it and selling it, buying it and selling it. That's how we kind of should really be treating it right now. There's no reason why we can't continue from here where we are right now. But you can see how it becomes harder to trade this in a bear market in spot. Another way you could do it is you have to learn leverage. All right, so there's a number of different ways you can trade leverage. There's all these different exchanges. There's Bybit, very popular exchange, mostly famous for its coin futures. So you trade your coins and get rewarded in coins, so your profit is in coins. So Bitcoin, you get Bitcoin, and so on and so on. It's a good exchange for what it's worth. I don't use it very often, but it is a good exchange, and its liquidity is high, and it never seems to go down. In my experience of using it over about 3 years now, it's never gone down, which is something I can't say for Binance. Binance is like a jack of all trades in when it comes to leverage trading, and a master of none. So you've got a lot of you can do coin futures there. You can also do normal futures where it's all in tether. But as we've probably all been witness to recently, it goes down, and when it goes down, it's usually at times of extreme volatility. That's the last thing you want, all right, when you're trading futures. I have to say though, Binance is always my preference for spot trading. It's the best, highest liquidity. That's what you want with spot trading, but margin trading not so much. Your risk is obviously increased a lot when you're doing margin trading, and if you're looking to do shorts on something or longs, and the exchange goes down, you can't access you have not put stop losses or take profits in. That can be a very stressful time. So I personally don't use it for margin. The one I use is Bityard, which is actually quite a new exchange, but it's so far it's not gone down ever. And the thing I quite like about it is that you can automatically set your stop loss before you even, as soon as before you even start the trade. So in your settings, I've got to have my stop loss at 10%. I would only do margin trading if I'm very confident in it. I don't often do it, but I prefer this against most others. So you've got a large number of coins that you can trade against, even more here, and you can even do where is it? Where is the you can do derivatives on traditional markets in Tether. So there's a number of reasons why I like it. So first of all, the risk management side of things, and then secondly, you can do traditional markets, which can be quite useful if you're into that kind of thing. So what you'd need to be thinking about here is, am I prepared to do this? Because this is a lot riskier. And as we've all seen with GameStop recently, people who short, they take an enormous amount of risk for for a smaller amount of reward, basically. But it is in a downtrend when it can be your best friend. But I'm not advocating you use this or even try this if you're not used to it. Another thing you might be interested in with Bityard actually is that if you wanted to, there is a demo account that you could use, and you can practice. Which I don't think you can do that on any of the other exchanges. So now we've gone into the demo account, you can practice your leverage trading and see if it's something that's working out for you. It's only going to work out for you, and because this is a demo, you might be thinking, carefree, let's see if I can make $1 million. Don't treat it like that. Treat it like you would do anything else. Enter a trade at an appropriate time, at an appropriate place, and treat it like it is your real money. So this is, like I say, for shorting, that is one way to profit from a downtrend. Another thing you could do would be to use trading bots. Trading bots is another way that you could profit from a downtrend. So there's two ways to do this. At the moment, where we might be looking at a downtrend with Bitcoin in the very short term, right? We're under the I suppose the agreement that Bitcoin will recover from this zone and make new highs over the next few months, certainly by the end of the year. So in that respect, you could start a bot here, and the way to do that would be not to have a bearish bot where you're using down tokens. That's one way you could do it, but again, that's taking on more risk than you need to. And this is just for the moment right now. When we get to the end of the market cycle and we go into a bearish situation for perhaps a prolonged period of time with significant pullbacks that can almost be timed due to the market cycle. So we're talking about between as early as maybe November, December to as late as January, February. So there's quite an area, a large area there of gap where you could see enormous uptrend in that time. So I'm not saying short willy-nilly or go setting up bearish bots at random. We have to make sure that we are in an established downtrend, and it makes sense that some of these areas correspond to the overall market cycle. And we can look at all kinds of other things to suggest that tops are in as well at that point. But if we were to do it now, where we think that we could go into a downtrend that could be a couple of months long, let's have a look at how we would do that. So let's go and trade. Shall we trade? We'll trade Ethereum to Bitcoin. So where is that in here? Ethereum to Bitcoin. What am I doing here? Should have probably got this prepared beforehand. Ethereum to Bitcoin, Bitcoin. There we go. Right, Ethereum to Bitcoin chart. Okay, so if I show you this. First of all, this shows the Ethereum to Bitcoin chart on the weekly, which is basically an uptrend on a weekly. So it looks as though that Ethereum is going to be strong against Bitcoin. We're under the illusion at the moment. I won't call it an illusion, but a relatively strong degree of success that even though there's huge spikes up and down, that it continues to make higher highs and higher lows against Bitcoin. So it's stronger than Bitcoin, generally speaking. So with that knowledge, we could set up a bot like this. We'd move this to the longest time frame that we can get. So we go to a daily here, and we would look at the supports and resistances that are on this chart here. So this goes back. We can see the uptrend here, can't we? The same uptrend that we saw on here on the weekly. It's easier to see on the weekly. We don't have that capacity on Bitsgap here to see it on the weekly, but you can still see that uptrend, the one that we spotted a moment ago. On the weekly, and that is basically it on the week, but this is on the daily time frame. Okay, that in mind, if this is our support zone here, which has in the past been compromised, we could up the level of risk ever so slightly. We don't think we're going to come down to these lows, even though that could be possible, but in the past we have broken down below this, even though we got sucked back up in it. We could create a bot like this, which could sustain a downtrend and profit from it. The profit wouldn't be enormous, and the profit would be in the form of Bitcoin, but by the end of this downtrend, if there were to be a downtrend, by the end of this downtrend, if we get back to where we were when we started this bot, we would not just break even, we'd be in profit massively, because throughout this period, all of this price action will have been bought and sold, and bought and sold, and bought and sold, and you will end up with, probably a large degree of Bitcoin. I couldn't imagine how much this would take and how long it would take, because this is a long-term time frame. Each one of these ticks at the moment, you would be making a buy and a sell with half a percent basically. Every 0.5% would be a buy and a sell. So you probably would actually make a significant amount over time, but because we're not looking to use this entire grid, this grid is here to hedge our risk for safety purposes. Because we're using small portions of the grid for the most of the time, it means that our original investment is only going to be used a small portion, but it's a hedge. It's a hedge against a downtrend as well as an uptrend, with hodling both Ethereum and Bitcoin together to sustain both an uptrend and a downtrend and accumulate more Bitcoin on the side. I hope that makes sense. So if we were to create this bot, it would be as simple as that. We'd say, okay, this is safe. This is safe. This is 2020 here, January 2020. This is January 2021. This is a long period of time, and I really do not expect us to go down here for a very long period of time. And if that's the case, then then we're looking to be making trades within this zone here, which is a 53% area, which can take weeks for it to move up and down. So you'll be making less on a type of bot like this than the type of bots you've seen me use in the past, where I have smaller grids in smaller spaces. This is one of those bots you just press and leave for months and months and months, for the downtrend to complete and the uptrend to begin, and perhaps maybe even for the rest of the year. And it doesn't even matter if it's going up or down, given the degree of accuracy that we have on this support line here. So all the way from boing 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 boing, and the higher highs being formed even in the face of downtrends in the market. It seems to work out. So this would be one of those ways that you could profit from a downtrend. If this was a full-on bear market, though, then maybe this wouldn't be the best thing to do, because in bear markets, as we've seen in the past, full-on bear markets have a much larger retracement. We're talking 85% or more, especially with altcoins. They can retrace as much as 99% and some of these altcoins. So that you're to start a bot like that, what I've just shown you, for a full-on bear market at the end of a market cycle is probably not the greatest thing to do. Then you would look at doing a different type of bot. You would be looking at using the down token bots, and again, this is upping your level of risk. So let's just have a look at Bitcoin. Is it Bitcoin down pairing against Tether? So your profit in this instance would be in the form of Tether, which is good, because by the end of the bear market you'll have a lump sum of Tether that you could then go about using. So this isn't going to be very useful at this point, because the chart is pretty wrecked. But if we were to look at this chart, and again, this chart is an inverse chart. If we were in a bear market, this chart goes up. You can see how much gains could be made if we entered a bear market. Let's just say this was the end of the market cycle now, and this was the chart that you're looking to trade, and we went all the way up to the top here. That is a 21,000% move that could be achieved over a very long period of time. You were talking 11, 12, 13 months worth of bear market. You'd set up one of these bots. That's how you'd do it. And with this bot, you could set it up a lot differently. What I'd do is I'd move it to a 4-hourly chart, so we get a bit more price action. We'd have a lot more safety zone. We'd wait for a parabolic top to be formed. Then we would wait for a lower high to be formed, maybe even wait for another lower high and a lower low to be formed. Some of these other signatures that I showed you that we got in the previous bear markets, and then we would start this bot, and you would start it and you would again just leave it. You would have your trailing up set on, you would let this trade and trade and trade and trade for the rest of the bear market. And hopefully it would work out for you. I mean, like I said, I haven't done this. I'm about 4 or 5 months, maybe 6 months into using trading bots, but this is how I would set all my trading bots up over a year's period of potential downtrend. And for those who don't think that Bitcoin can retrace by 85% again, I think it's quite naive to think that. We all think about Bitcoin as having this finite supply, which is going to keep the price high. That's true, and it will do that eventually. Is it going to do it this time round? In this bear market, where there will be a bear market, it'll be silly to think that people aren't going to sell at a top. What are you going to do with your Bitcoin? You're going to keep it forever, or you're going to sell it at its highest price at the end of a market cycle? What would you do? I know what I plan to do. Bitcoin's all good and nice to have, but I prefer having that money available to me. And if I believe in this market cycle, the way it's going to play out, it will be the same that's played out in the past. I'm not saying it's going to retrace by 85% again, but it could. It may retrace only by 65%, but it will retrace when it hits that all-time high, because the all-time high, just as we've seen in the past and we see with altcoins all the time, it's a blow-off top, a massive top, an overvaluation of an asset, and it comes down, just like we see with Tesla, for instance, or anything. If it's overvalued, people sell, and it goes down, and then it creates a spiraling effect. So it would be naive to think that we're not going to have a retracement similar to the ones that we've had in the past. The only way that would be avoided is that every single last Bitcoin that's available to purchase out there has been purchased and nobody's selling it. That's the only way it would ever happen. And I don't think institutions are looking to buy into Bitcoin and not prepared to sell any of it. I'm sure they want to keep a vast majority of it, but I'm pretty sure that they would want to sell some, especially if it reaches values like $250,000, which is, technically possible by the end of this market cycle. I can't obviously predict its new all-time high at the end of the market cycle. No one can. But if it were to reach that, I'd probably say it'd be relatively overvalued at that stage, especially if that coincided with the end of the market cycle. When we're talking the end of this year, the fourth quarter, next year's first quarter, that's kind of what we're expecting to see. A massive blow-off top, and then basically a huge sell-off, which cascades into a downtrend, and then a bear market, right? So these are the ways you can survive a bear market. So first of all, you've got your sell-up and hibernation period. Wait for the bear market to be over, and then get back involved again. Enjoy your life for 12 months or so, and then get back involved like we have done in the past. If you want to take on more risk, then you use these bots. Short-term downtrend, that's fine. If we're talking about now, we might be looking at a downtrend. Then you set up a bullish bot. Accumulate more Bitcoin. We've got a whole year to go, perhaps, before the end of this market cycle. Why not accumulate more Bitcoin? Set up a chart that looks like this in the form of a bot, and it will continue until, like I say, this point here. All right, and who knows where the chart will be at this point. If we continue this momentum, it would look something like this. Is what we're expecting to see, and then probably something like that. So that would be okay to set up, and again, don't expect enormous profits back from it, but it's a perfect hedge if you're happy to hold Ethereum and Bitcoin at the same time. Put them into a trading bot and let them accumulate more Bitcoin on top of the Bitcoin and Ethereum that you already have. That's how to do it, and that's what you would do, and you'd sit back and you would leave it for a long period of time. And this is what I would expect, given the fact that we've been in this trend now for over a year, and this would give us another well, best part of a year really, before we would close that bot down and sell it all to whatever it is you want to sell it to. The bot will probably fail at that point there, and you would want to sell it. You'd close it down, but you have a very long period of time, best part of a year, for a trading bot like that. In the bear market, an established bear market where we come down, significantly at the end of the market cycle, you would change your bot into a bearish Bitcoin down against Tether. Your profit would be in Tether. That's fine. Accumulate as much Tether as possible. You would also be profiting on the down token that you've got. Now, there is other aspects. You've got to look into the down tokens. All right, down tokens are more profitable in 7 days, and then after that they deteriorate, but they still work. All right, you will still make profit on them, just at a much lower rate. So the first 7 days are going to be the most profitable, most volatile for the token itself, but they still work after that. So you could set it up over a prolonged period of time, so long as you're confident that there is a bear market in play and that you're happy to hold it, but it does carry more risk. And obviously the riskiest of all of these is going to be using leverage to short with. Hopefully all of that has been interesting for you, and I will make more videos on how to do shorts, longs and shorts, but if you wanted to practice it yourself without obviously doing it yourself, get yourself a Bityard account set up anyway, and you can just use a demo account and get used to the process of it. All right, it does require you to understand what you're doing though, so don't just go using leverage like I'm sure all these YouTubers often use leverage, 20x, 100x. No, never do that. Just don't do that. All right, if most people can't do it, and that's fine, because that's how people make money from it. They rely on people not doing it properly and taking big risks for you to lose your money. You will probably lose your money. It doesn't matter how confident you think you are. Even me, I lose my money on it quite regularly. My win ratio always makes up for my losses, but I've got a very disciplined approach to how I go about doing this, and again, I don't use it very often. So it is very risky, but if you wanted to set yourself an account up on Bityard, I've got all these links for all these bots and everything you put in, and all these exchanges in the video description below. So set them up, but don't go using leverage with your real money. If you've never done it before, you might as well practice it, and practice it for a prolonged period of time. Don't just practice it for a few days or an hour or something. Pretend it's your money. Practice risk management, and if you're losing more than you're making, then you need to practice more until you've basically turned that around and you're making more than you lose. It's only when you make more than you lose you can consider yourself worthy of even doing that with real money. But yeah, all the links in the descriptions below anyway, and join the Telegram, that's also down there, and I've got a Patreon channel as well for you to look at too. I hope you have a nice day anyway, and I hope that has been an interesting video for you. I appreciate I've rambled on long enough about this, and I will make some more focused videos on the Patreon channel about how to use each one of these processes individually. Thank you for watching, hope you have a nice day, take it easy.